Bitcoin is digital money that exists only online, with no physical bills or coins to hold in your hand. Instead, it lives on the internet, accessible to anyone with a smartphone or computer, no matter where they are in the world. It was created in 2009 by the mysterious Satoshi Nakamoto, whose true identity remains unknown to this day. This origin story has only added to Bitcoin's mystique and allure. Unlike dollars or euros, Bitcoin isn't controlled by any government or bank. It runs on a decentralized network of computers worldwide. This means no single authority can print more Bitcoins or freeze your account. This setup allows people to send money directly to each other, often faster and cheaper, especially across borders. For many, Bitcoin offers a way to move money without relying on traditional banks or payment services. Many treat Bitcoin as an investment, hoping its value will rise, but its price is famously volatile, swinging up or down quickly. These wild price swings can happen in a matter of hours, making headlines and drawing attention from around the globe. Traders are drawn to these rapid price changes, trying to profit from the swings. Some see it as a high-stakes game, while others use sophisticated strategies to manage risk and maximize gains. Bitcoin's price often sets the tone for the entire crypto market. When it rises, other digital currencies usually follow. It acts as a kind of barometer for the health and mood of the whole industry. Some see Bitcoin as digital gold, a way to protect wealth from inflation, since only 21 million Bitcoins will ever exist. This scarcity is built into its code, making it impossible to create more. This limited supply is a big part of its appeal. Investors and enthusiasts believe that as demand grows and supply stays fixed, the value could increase over time. Major price moves are watched closely by investors and economists, testing the idea that Bitcoin can be a store of value. Every surge or crash sparks debates about its future and its role in the global economy. The price also reflects public sentiment and adoption. When big companies buy in, prices can soar. Each new announcement from a major corporation or financial institution can send shockwaves through the market. Negative news, like regulations or hacks, can send prices tumbling. The market reacts quickly to uncertainty, and even rumors can trigger dramatic changes. Tracking Bitcoin's price gives a real-time look at the health and direction of the digital asset industry. It's a pulse check for innovation, risk appetite, and the world's shifting attitudes toward money. It's a story of innovation, risk, and the changing nature of money. Bitcoin challenges old ideas about what money can be and inspires new ways of thinking about finance. That's why so many eyes are always on Bitcoin, because it's not just a currency, but a symbol of a financial revolution that's still unfolding. October, once known as Uptober, for Bitcoin's reliable gains, took a sharp turn in 2025. Instead of the usual rally, Bitcoin is closing the month down about 3.7%, its first negative October since 2018. This break in tradition has shaken traders' confidence and forced a rethink of old market patterns. The loss of the Uptober streak signals that new, stronger forces are now shaping Bitcoin's price. Investors who relied on seasonal trends are reminded that history doesn't always repeat. The market's mood has shifted from optimism to caution as the year winds down. Now, everyone's wondering, is this just a blip or the start of a longer slump? The end of Uptober has everyone watching the fundamentals more closely than ever. All month, Bitcoin has been stuck near $110,000, unable to break higher. This level has proven to be a significant resistance point, frustrating both traders and investors who are eager to see a breakout. Every attempt to rally has met heavy selling, keeping the price trapped in a tight range. The market seems to be in a state of equilibrium, with neither buyers nor sellers able to gain the upper hand. This sideways action is a big change from Bitcoin's usual wild swings, frustrating traders looking for momentum. The lack of volatility has left many market participants on edge, unsure of what the next move will be. The $110,000 level has become a psychological barrier. Breaking above it could spark a new rally, but so far, buyers are hesitant. This hesitation is partly due to the recent market conditions and the fear of another sharp drop. After a sharp drop earlier in October, confidence is shaky, and sellers are quick to take profits. This has created a cycle where any upward movement is quickly met with selling pressure, preventing sustained gains. The market feels balanced but tense, waiting for a catalyst to move decisively. Traders are closely monitoring news and events that could provide the spark needed to break out of this range. As October ends, Bitcoin is barely changed, reflecting a month of stagnation. The lack of significant movement has left many wondering if November will bring the volatility they crave. The excitement of Uptober has faded into a cautious, watchful mood. Traders are now more reserved, waiting for clear signals before making their next moves. For now, the market is holding its breath, waiting for a clear signal. Everyone is on edge, anticipating the next big move that could finally break the stalemate. One big reason for Bitcoin's weak October is renewed trade tensions between the US and China. Hopes for a breakthrough fizzled after a key meeting between leaders ended with no progress. This uncertainty has made investors risk-averse, pushing them out of assets like crypto and into safer bets. Instead of acting as a safe haven, Bitcoin has dropped alongside other risky assets. The ongoing standoff means tariffs and trade barriers will likely stick around, slowing global growth. Bitcoin's price is now tied more than ever to global events and economic policy. The failure to resolve trade issues has become a major roadblock for Bitcoin. Even the world's top digital currency isn't immune to geopolitical anxiety. Its fate is now linked to the actions of world leaders. Another drag on Bitcoin this month has been the US Federal Reserve's tough stance on interest rates. The Fed signaled it will keep rates high to fight inflation, disappointing investors hoping for easier money. Higher rates make safe investments like bonds more attractive, pulling money away from riskier assets like Bitcoin. The days of easy money and rapid crypto growth are over, replaced by tighter financial conditions. The Fed's hawkish signals have reinforced the risk-off mood already present from trade tensions. Investors now weigh the cost of holding Bitcoin versus earning steady returns elsewhere. This has added to the selling pressure and kept Bitcoin stuck in its range. The Fed's next moves will be crucial for Bitcoin's direction. Crypto's fate is now closely tied to central bank policy. October 2025 saw a surprising split between Bitcoin and US tech stocks. For years, both moved together as high-growth, risk-on assets. But this month, while tech stocks soared, fueled by AI excitement and strong earnings, Bitcoin lagged behind. The Nasdaq gained over 4%, but Bitcoin ended the month in the red. This break shows investors are now seeing crypto and tech as separate bets. The AI boom lifted tech, but didn't help Bitcoin or other cryptocurrencies. Investors are allocating capital differently, focusing on sector-specific stories. This divergence could signal Bitcoin's maturation as its own asset class, or raise concerns about crypto's appeal. The lack of spillover from tech's rally is a trend to watch. It's a new chapter for how markets view digital assets. While Bitcoin struggled to hold its ground, altcoins faced an even harsher reality in October, with many investors watching in disbelief as their portfolios shrank day after day. The broader crypto market was hit by steep, double-digit losses, as nervous investors rushed to the relative safety of Bitcoin, abandoning riskier altcoins in droves. Ether, the second-largest cryptocurrency, dropped about 7% for the month, reflecting the widespread uncertainty and lack of confidence in the market. Meanwhile, XRP and Solana suffered even deeper losses, falling over 11% and 12% respectively, as selling pressure intensified across the board. Cardano was hit hardest among the major coins, losing a staggering 24%, while Dogecoin, the popular meme coin, tumbled 20%, wiping out months of gains in just a few weeks. This relentless sell-off highlights just how fragile investor confidence is in the altcoin market, where optimism can quickly turn to panic. When fear takes over, liquidity dries up almost instantly, and smaller coins can plunge even faster, leaving investors with few options to exit. The sea of red on trading screens is a stark reminder of the high risk and extreme volatility that define the altcoin space, especially during turbulent times. There were rare exceptions to the carnage. Binance's BNB token and the meme coin, Trump, both managed to defy the trend, posting gains of about 9% each, offering a glimmer of hope to some traders. But for the vast majority of altcoins, October was a painful and humbling reminder of just how vulnerable these assets can be in a risk-off environment. The market's appetite for risk has clearly shrunk, with many traders now rethinking their strategies and exposure to volatile assets. Only a handful of assets managed to buck the trend, standing out in a market otherwise dominated by fear and heavy losses. Despite the crypto market's slump, Some public crypto companies thrived in October. MicroStrategy, the largest corporate holder of Bitcoin, posted strong earnings, sending its stock up 6%. The company's success shows that business fundamentals can shine even when Bitcoin's price is flat. Chairman Michael Saylor doubled down on his bullish outlook, predicting Bitcoin could hit $150,000 by the end of 2025. Coinbase, the top U.S. crypto exchange, also beat earnings expectations, with robust trading volumes driving profits. These results highlight a growing disconnect between crypto prices and the underlying growth of crypto businesses. Exchanges and firms can profit from activity, even in sideways or falling markets. Their strong performance is a rare bright spot in a tough month for crypto. As October ends, everyone's asking, what's next for Bitcoin? Some analysts see the current stagnation as healthy, a chance to build support before another rally. Bulls like Michael Saylor point to strong fundamentals and upcoming events, like the next halving, as reasons for optimism. Others warn that macro headwinds, like the Fed's stance and global tensions, could keep Bitcoin stuck or push it lower. The crypto market is small and moves fast. Big news or a single tweet can trigger wild swings. Sentiment is everything, and the market can turn on a dime. A positive catalyst, like a trade breakthrough or dovish Fed, could send prices soaring. But negative news could just as easily spark another drop. In crypto, volatility is the only constant, so stay alert.